Welcome back to Morning Trade Live. Nvidia's red right now. Tom's looking at the options, and Kevin Mahn joins us from Hinian Walsh Asset Management. He's in New York. He's President and Chief Investment Officer. Welcome back. Always great to see you, Kevin. Nvidia's kind of fading overnight. What do you think?
Well, I think NVIDIA continues to remind investors of two things, Oliver. First and foremost, that the AI revolution is alive and well. Secondly, that perhaps they are the ultimate multitasker with an aggressive chip rollout schedule, looking to have the ultra version of Blackwell delivered in 2025, Rubin delivered in 2026, and the ultra version of Rubin delivered in 2027. Plus, they have an ever-expanding data center business, and as we learned last night, still have a foothold in the gaming business. So to me, NVIDIA remains at the hub of the AI ecosystem. It's just a question of valuation and how much longer they can continue to surpass analyst expectations on both earnings and on revenues.
Okay. The trade here this morning seems a little bit heavy. We're at 150, but we just put in new highs. How do you think the valuation looks right now, Kevin? Is it reasonable given the growth, or is it extended?
AI is not slowing down, but there's going to be many potholes along the AI revolution. And in all likelihood, Oliver, there's going to be more losers than there will be winners. But NVIDIA will be one of those winners. And they're not complacent. They're not stopping. They're not resting here. It's just a question, once again, can they continue to surpass analyst expectations on both earnings and revenues? I believe that they can. But will they surpass those expectations by enough of a margin to justify that current valuation and continue to trade higher? But if you believe in the AI revolution and you believe that it has years, if not decades, to go ahead of you, you certainly want to have NVIDIA as part of that overall AI portfolio.
SOX, the index trades at 34 PE. NVIDIA trades at about 58 trailing. Which one would you rather own right now?
I'd rather have a broader basket of opportunities with an AI revolution.
Yeah.
Recognizing that the AI ecosystem all feeds off of one another. And Oliver, there are also other opportunities within the semiconductor and chip space. We talk about companies such as ASML, one of the top lithography providers to semiconductor foundries. How about a company like Taiwan Semiconductor, the largest dedicated chip foundry in the world with nearly a 60% market share? Look, NVIDIA is one of their biggest clients, and we actually know that Taiwan Semiconductor is one of the biggest clients of ASML. They all feed off of each other. So as opposed to just trying to pick one winner, why not try and develop a whole investment strategy off of that supply chain and invest in the entire ecosystem as opposed to just perhaps one company and being that concentrated in their success?
Do you like the Taiwan Semi figures that we got, the implications around sales from Foxconn yesterday? Do you think fresh new highs in TSM make sense?
I certainly do. If you look at where they trade right now, they're trading at a little bit about 37 times current earnings. But if you look at where their earnings are forecasted for next year, all of a sudden that valuation becomes a lot more palatable. They also have a trailing 12-month yield of around 1%, positive free cash flow, expanding profit margins. Taiwan Semiconductor will only continue to expand as the data center and the chip business expands. They benefit from that. So we do like Taiwan Semiconductor going forward.
All right. So it seems like the basket is what you like right now, but obviously not hating NVIDIA. Man who loves his chips. Thanks, Kevin. Appreciate it.
My pleasure. Happy holiday.
Tom.
Yep.
Tell me about some options here. We're all bulled up now. But I thought it was interesting that Kevin kind of said basket over NVIDIA to the valuation question. Let's trade NVIDIA first, though.
Yeah, but if you look at maybe the SMH or the SOX versus NVIDIA itself, which hit all-time highs earlier in the session, we've seen that divergence because the components within it, the Intels and the AMDs have been underperforming. So maybe the basket does work if you think the whole sector is going to rebound. But look at NVIDIA. Stocks pulled back. under 150 bucks a share now. So I looked at a strategy that says, hey, this might give you an opportunity if you think this stock is going to move higher and get back to all-time highs. So I went out to the January 31st weekly cycle, so just 3.5 weeks to expiration, where I'm going to sell an out-of-the-money put, sell a cash-secured put here with the thought that, hey, if the stock doesn't go down any lower, I get to keep the credit I collected. If it does go down lower, I'm comfortable buying the shares at a lower entry point. So selling the 145 strike put in the January 31st weekly options, collecting a credit of around $4.70. You actually might get a little bit more than closer to $5. But if you collect a $4.70 credit, that takes your break even where you start losing money down to $140.30 over the next 24 days. That's nearly 6% below the current share price in there. Now, works twofold, right? If stock stays above 145, keep the credit that you collected. It's a pretty hefty credit for a 3.5 week trade. And then you can repeatedly do this type of strategy if you think the stock's going to stay above a specific strike price through expiration. So this might be the way to look at it where, hey, if it does fall, I can buy the shares 6% cheaper than where they are right now.
Okay. So that kind of appreciates the potential for some volatility in both directions, which I do think is reasonable, even though we just put in the highs. I mean, it's fading right now.
Yeah.
Because again, as Jenny was pointing out this morning, this is the consumer electronics show, right? This is not the data center hyperscaler show.
Right.
So this idea that like the main, pulse of their growth was going to get some kind of fresh update, there was nothing there. There's nothing
they're
there.
talking about gaming, which is only 10%
which is
of
great.
the revenue. Yeah.
Yeah. I mean, and again, like if we talk to these people who are building these AI agents that are going to like help financial advisors and people like build their own hedge funds if you wanted to, like you're going to need a monster machine to run that stuff.
Right.
If I've seen some demos of people running their AI agents, like your computer needs to be cranking.
Yeah.
So, if you just do it all built into NVIDIA's code or whatever, like that does make some sense. That's cool, but like, I'm not really sure that's what the rally's been about.
Yeah, building the architecture within laptops, desktops, coming out with it, and the
will some super high-end consumers like that? Yes.
Yes.
But $3,000 or whatever.
Right. Yeah.
But then you're the one buying Viore pants. So and all you need to do is get a trading code that works, and we can plug that in.
Yes, exactly.
All right, let's talk TSM. What do you got?
They got earnings on the 16th, so that's going to be a key event. So I looked at something short term, takes advantage of it. If you think this stock's going to move higher, remember, it hit all-time highs in yesterday's session and up 90% last year. So I looked at something where I can offset some costs on a bullish trade here if you think the stock's going to go higher. The option market's pricing in about a plus or minus $15 move either way in the shares on this. But I went out to the January 17th, so you're going to capture that earnings on the 16th. Buy a unbalanced or broken wing call butterfly here where I'm going to buy one at the money, 217.5 strike call, sell two of the 230 strike calls, and then buy one of the 235 strike calls. I'm only paying a debit of about $3.70. I actually think you could probably get it for $3.50 right now. But the debit you pay is going to be your risk on this one. Takes your break even to 221.20 over the next 10 days. You're going to capture that earnings event. That's only about 2% above the current share price. So you don't need a monster move to the upside. And even if the stock does go up maybe 2 standard deviations, rallies to fresh all-time highs above 235, it's still going to be more than a double in profitability on that. But you want it to go towards at or near about the 230 strike, which you're short 2 options on.
Okay. So you're short, the 2 strikes are on the short side, right?
Yeah.
Okay. That's the important part of the trade. You're selling, okay.
Buying a call vertical, offsetting some costs by selling a call vertical.
Okay. But they're all the same expiry.
Yep.
Okay. All right, nice.
January 17th.
I like these trades because they do, I think, appreciate that. There's probably going to be some chop, right? There's going to be moments when you have these big hype cycles that the hype is going to have to reset, which it did for a couple months with Nvidia.
Yeah.
So,
well, when you take a look at this type of strategy, you're buying the bullish call vertical within the components, and then also selling something because implied volatility levels are elevated.